It's possible to make $100 every single day trading crypto, and that's what I want to be showing you in today's video. I'm going to be using 3 specific indicators to show you exactly how I do it. Not going to waste any more time. Smash the like and subscribe if you do enjoy today's video. And make sure to stick around until the end because I'm going to be showing you exactly how I use these indicators to profit every single day in crypto. Mainly, we will be focused and using TradingView. So you can actually jump on and use the free version of TradingView. I'm sure a lot of you have already used it. Currently using the basic paid plan. That just allows me to have a few extra indicators on my chart and actually have my charts viewed a little bit easier when I have multi-screen. So if you do want to check out TradingView, you can use the link in this video description. Now I want to head straight over into the specific indicators that I'm using to day trade every single day. So let's actually minimize these 2 initial indicators, and I'm going to be focusing first on this orange line on the chart. This is known as the exponential moving average. Now, you can actually easily add this to your chart yourself. Come over to the indicators, type in EMA. Now we see moving average exponential. Click on this, and now you'll have it added to your chart. Now, it won't look exactly like mine. What you need to do is double click on the line, come over to input specifically. Then you can actually change the length to 20. And then the style, I've changed it over to orange and made the line a little bit thicker. Now, how I'm able to use this indicator and why it's so effective is because I first start on a larger time frame. So let's pick the larger time frame. If you're trading on a 1-minute chart, then a larger time frame is probably 1 hour to 4 hours. But if we're trading, let's say in this instance, I'm going to be trading a 30-minute to 1 hour chart, the 1-day time frame is perfect to understand exactly how this exponential moving average plays out. So we only ever want to trade in the direction of the slope of the EMA. And what I mean by that is the EMA can have 2 slopes where we start from the bottom left of the chart and move to the top right. This has a positive slope, and if we have a positive slope, we only ever look for longs to the upside. We can actually scroll back onto the chart and we can see all through this region here, the exponential moving average was moving from bottom left, top right. We have a positive slope, so we only ever look for longs in this market. Then conversely, we actually have a negative slope where the EMA starts from top left and actually moves to bottom right. Now, this is a negative slope and we only ever look for shorts. Now, you can actually see this happening right here, right before our eyes, where we have the exponential moving average with the negative slope. Only ever look for shorts in this specific range. So now that you understand how we use the EMA, now we then shift to that shorter term time frame. So if I'm trading on a 1 hour time frame, we analyze on the daily. So now we know that the long-term trend is down, or at least the medium-term trend. And all we ever want to do in this instance is look for shorts. So when we move down to that shorter term time frame, I'm only ever looking for shorts. So now that I move down to the daily, anytime I see strong upside momentum pushes, you can see very much so we're getting quite strong rejections to the downside. How price has been moving over the last few days to the last few months, anytime we have an upside push, so on this shorter term time frame on the 1 hour, anytime we have a positive slope on the EMA, we can use this as a selling indicator because we know the long-term trend is down. So that's how I use the exponential moving average, and then I use it in 2 specific time frames, depending on the time frame that you're going to be trading. Anytime I see a positive slope, then when I first see the break below the positive slope, so we can see here, this was the first break. We have a positive slope on the EMA. This was the first time we closed below the EMA and broke. That's now the signal to look for the shorts to the downside. And now this actually happens time and time again as we scroll back through the chart and we see, again, the exponential moving average, positive slope on the EMA. We get this first break below. This is where we look for shorts. We place our stop right above this last push. We look for that continuation. The next indicator I want to focus on is known as the MACD. So you can easily add the MACD to your chart. As I showed you before, come to the indicators, type in MACD. Here we have the moving average, convergence, divergence. And you will want to double click on the MACD, and you will want to actually change some specific settings. Like here, I've actually unselected the MACD line and the signal line. These will be defaultly selected when you were to add the MACD to your chart. The reason I do this is because I don't find those specific signal lines to be effective. What I'm focusing on is the histogram of this MACD. How I'm trading the histogram of the MACD is I'm only ever looking for when the MACD changes its initial color. So we can see in this region, we're seeing strong green bars to the upside, and every single bar is dark green, dark green, dark green. What we're waiting for is our first shift and our first color change, as we see here. What we're seeing here is the bullish momentum beginning to fade. So prices are at all-time highs, but the momentum begins to fade. This is now our signal to look for shorts. And you can see we've had some strong bearish momentum to the downside. Then what I actually do is to look, when do I want to look to exit this trade? Well, I look to exit the trade in the opposite direction, where we can see we're having continuous increase in bearish momentum. You can see the bearish momentum started back here and is continuing to increase. And we're continuing to increase as we move into the red indicator. And when this red MACD histogram shifts from dark red, now shifts to this light red color, that's the indicator again to signal, okay, the bearish momentum is now fading and some bullish momentum is coming in. That was actually perfect on the chart. As we saw right here on the histogram is when we would have taken the short, and we would have bought back our position right in here. That was a really solid trade of around 15%. As the bullish momentum begins to climb, we see we get a climb all the way, pushing into the green, and then the green fades. We get our first shift from green into this light green color. So right here is when we got the shift. We now have a sell signal right here, and we don't get the buyback signal until right down here. And you can see where we continues to have bearish momentum, and then we first have our first tick of bullish momentum when this dark red shifts to light red. Right in this region, we get another trade, and we get another around 10 to 12% on that trade. Super, super consistent. Now, the MACD works best on these longer term timeframes because it's very similar to the EMA. How I'll use the MACD is I'll use it in conjunction with the EMA, but what I'll do is I'll be analyzing the MACD on the daily time frame. So analyzing any histogram changes and any changes from bullish momentum to bearish momentum, because I want to trade when the MACD and the EMA signal together. We can see right here, we're getting a lot of signals on the MACD that we're changing from green to light green, green back to light green, green back to light green. But look at the exponential moving average. Exponential moving average right now is sideways. When we have this sideways momentum, look at how the MACD is giving us multiple signals. We only ever want to trade when we have confluence between the MACD and the EMA. Now, as we see, between this region to this region, we have a declining EMA, and so we can look for these declining shorts or short positions in the MACD. I won't be using the MACD down on the hourly time frame. It's very, very effective to analyze on these longer term time frames initially, and then use it because we use it in conjunction with the EMA before we then move down to those shorter term time frames. The next indicator I want to show you is the RSI, the Relative Strength Index. I'm sure a lot of you have used this specific indicator, and how I'm going to use it is actually come over and change some initial settings. So when you come over to inputs, you can actually get the RSI to calculate the divergence for you. So click on this button, get that calculated, and we now see on the chart, you're going to have bearish and bullish signals actually automatically given to you. Now, how I'm going to trade using this RSI and calculated divergence is I'm first going to wait for the RSI to give me a bullish or bearish signal. So here we have a bearish signal, and here we look for shorts in the market. So here, as we got the signal, I look to take a short. And you might say, okay, where would I look to buy back in my position? Well, the first time this RSI line actually moves to oversold below this 30 line, that's going to be my signal to then get out of my position. We see the first time the RSI enters the below 30 or the oversold region is right here. We can look at where our entry was. Look at the type of trade that the RSI gave us. It's around a 35% trade, and we literally just got our signal to get out of the market. Now, quite similar, we'll actually come over to this region in the market. We can see we did get a bearish signal. So we got multiple bearish signals. This was our first bearish signal. We got one bearish signal right here, and then we got a second bearish signal right through there. So let's say we took a short here. We took our second short there, and then, as I mentioned, we wait for this RSI line to then come down to the oversold region. The first time the line entered the oversold region was right down in here. And look at our trades, both of our trades. We made around 20% on the first trade, and on the second trade, making around 22.5%. So it's a very, very effective strategy because the RSI divergence is calculated for you. So you don't need to second guess yourself. The actual indicator is giving you the bearish or bullish signal. And then all we need to wait is for the signal to continue to fade down and actually enter the oversold region. It'd be the exact same for the opposite. Now, it would work very much the same in the opposite direction. As we see here, we got our first bullish signal after we exited out of our position. So this was our entry point right in this bar right here. The price went a little bit below, but that's absolutely fine because where do we look to exit our position? We look to exit once the RSI line for the first time goes into the overbought region. And where was this overbought region? Actually reached the overbought region in this area. And when we calculate our percentage profit on the trade, again, making around 33% on that trade. So it's such an effective strategy to use because we don't need to call the exact bottom, but we're waiting for that trend shift. And then we wait for a top in the market and we nearly perfectly get a top 100% trade. Now, the specific exchange that I am using to trade crypto right here is WEEX. And if you use the link in the video description, you actually get up to $100 for free just for signing up, and you can get up to $30,000. So all you need to do to get this first $100, basically link your phone number and KYC, and you get between $10 to $100 into your account. Then you'll have access to be able to trade Bitcoin directly on WEEX. So don't forget to check out the link in the description, as you can get $100 for free. Those are the 3 indicators that I'm using every single day to be able to day trade crypto. If you have enjoyed today's video, don't forget you need to smash the like and subscribe, and I'll see you in the next one.